The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi, folks. Basil Chapman sitting for Larry Pesavento. Larry's voice, I believe, is still, I think he's on the mend, but the voice is still not quite ready. So my pleasure to be here. And, of course, it might be the Trade What You See hour. I cannot do anything that Larry does. He's the expert and his particular techniques. But I want to cover some of the many charts that he discusses. Look, here's the crude oil chart. Let me just change this little mouse here. It's starting to do some funny things. So what we're looking at within the context of two mice. All right, let's go for the third one. What we're looking at is this inverted head and shoulders pattern in the crude oil. Very strong move up today, 4.96. I'm talking about the continuous contract. I know when you're trading, you're looking at particular months. I find, let me see, so I'm just going to do this as just CLU 22. We're trading now at 101.44, and that is trading at 101.43. So the patterns are exactly the same. They're not always the same. As you get into the rollover period, they tend to change. The prices change. Not the patterns, only the prices. So I'm looking at this, and it's broken above the arch formation. So in the Chapman methodology, if I can just do this right there. What we look at, we try to identify the lowest low bar. We use techniques to do that, and then count each successively higher peak. A, B, C, D, E, F, G, that's 7 peaks. There's never an 8. There's never an H. It's like music. There's never an H. A, B, C, D, E, F, G, never an H. And it's also broken up into quadrants, like in music. So you've got your 4 peaks to peak D, and then you go to the next 3, maybe 4. But in this particular instance, it's a buy signal upgraded to a buy mode that takes you to at least a D. We've got that in the Dow. We've got that in the QQQ Index 100. We've got that in the trading vehicle, that is. We've got that in the IWM, the Russell 2000. We only got leg C in the S&P, and that says by next week we should make it a D in the S&P, and maybe with the Dow, maybe an E or something like that. We will get some kind of a 3 to maybe 2 to 4 day hiatus breather. We'll see. So at D, other things can happen, the 4th highest peak. Within that context, I only look at 3 patterns. No, I shouldn't say that. I look at everything because I'm a visual artist. And there's not some of it's mathematical, but a lot of it is artistic. So I look at straight up, straight down, cup formation, arch formation, a mix of 1 and 2 and 1 and 3. If it's 1 and 3 with the H pattern, the dreaded H, if you take out that left side low and within 3 bars you don't close above it, has implications. Look at this, arch formation failed within 3 bars. It got above, and then it failed again in an H pattern. Then it held in the 3rd bar. It broke above the left side low, and that was the turnaround. And now you've got an inverted head and shoulders potential. That's all. But look, the stochastic is, now Larry uses none of these techniques. I use a lot. I don't have to. I could do the naked chart. In fact, I very often like to show you the naked chart with all the patterns, because if you identify patterns, just like Larry's looking, often he says he's looking at my work and he sees all his stuff in my work. I look at his and I see his Gartley's, etc. It's just different techniques to looking at the patterns in a visual different way. I remember being in London years and years ago, decades ago, and standing in the store with all these posters, and I'm looking and I remember I had this English jacket on, naval jacket, just straight with the buttons and everything, long one, and I had a beret on. I was the only person that looked French, but I wasn't French. When we then went over to Paris, people were asking me for directions because I had a beret on, because I couldn't even speak French. I was the only one in the whole of France with a beret. They don't wear them anymore. Anyway, so I'm in this store in London, and I'm looking at this post, and I thought, this is really, and I did graphic arts when I left high school. I went to graphic arts, and I'm looking, I thought, that's really beautiful. And as I'm standing there, this woman turns around to her friend and says, "Oh, I love that picture. I love that picture of John Lennon." Boom! All of a sudden, I'm looking at John Lennon. I was looking at dots and blurs and blobs, and I was looking at the artistic. Suddenly, it became John Lennon. You can't unsee something. So, as I say, I'm very visual. So what we're looking at here is that there's a pattern that says, I have reversed from being in a downtrend to a sideways trend. That sideways trend, the ellipse on the left, or the quoro, the semicircle, quarter semicircle on the left, will start the boat cup formation, quoro on the right. If crude oil at any point goes to 103.20 to 104.20, all of a sudden this is going to be important. Why? Because look at the rectangle formation. I'm talking about these rectangle formations where the price starts off from the flagpole pullback and then plunges and then doesn't take out the left side low, but it starts to make higher highs and higher lows. And you can, in that same time frame, I used to say in a shorter time frame, but in the same time frame, it can rally all the way to a peak A, a peak B, peak C, even a peak D, just under, right on, or just above the previous high. And then if it pulls back and takes out, I drew this yesterday, halfway into the body of this rectangle formation, which is a lopsided cup, I call it the gravy cup, then there's a good chance it's going to come all the way down and test the left side low, the horizontal base. If it takes that out, then it can go one-to-one to the downside from the cup, from the arch formation, if it makes a dreaded H. So far, it's held very nicely above the 80, 85-ish area that was made in March. And 87 was the low just recently. And here it is at 101. I mean, 23 points higher. That's pretty good. So I think crude oil is trying to find some kind of a base. Will that affect the market? I just don't know, because it depends on how high it goes. Well, this particular pattern says you look to the left side for some kind of left side resistance. And in this case, it is the continuous contract high of the 8th or the 11th of July in the 102s. Today's high is 101.88. So that'll be the next level of resistance. But then you've got to look at a shorter time frame, because the shorter time frame is your lead. It's, think of, I always talk about super tankers, that you don't see the turn in the super tanker until it's way, I grew up at the ocean as a preteen, Cape Town, South Africa, right at the tip of Africa. I could look out of my bedroom window. I could see Robben Island. Eventually that became where Mandela was imprisoned. I could give a story on that. I won't right now. But what I will say is that within the context of looking at, how can I put it this way? Here we are. In the context of looking at the chart pattern from the left side, right side price time match, this wave spike to the upside is a leg D in the 120-minute chart. And it says at this particular point, you could have a little bit of a pullback. So I'll talk about support and resistance as soon as I return. Basil Chapman sitting 11 o'clock till noon.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back, and I threw out a call from Lenox, Mass. Maybe it's from the Boston Symphony Orchestra. Anyway, what we're looking at here is the crude oil has spiked into a leg D. And you can see I drew this beautiful cup formation. Look at those peak, look at that previous peak D that pulled back sharply, and then it went to peak A, peak B, F/C, held nicely, and then spiked up today. So now what's interesting about this is that left side high, right here, right there, at 2 o'clock on the 19th of July. This is a continuous contract at 100.99, miss around number 100 by penny, pulls back sharply to the 93s, runs up to a peak D, makes a cup formation, holds the left side, the dreaded H pattern. Oh, I never even spoke about that. So the dreaded H pattern is this. If you take out that left side low and close below it, you can go 1-to-1 to the downside, and it's called the dreaded H because it keeps going low. We've seen that in the bear market of 2022 in almost all the charts. So this is a positive one, the inverse, like a mirror image, the reverse Y. Take out the left side high, you can go higher. So what we're looking at here is there's your cup formation, changes to an arch, there's your cup formation, changes to an arch, successful, spikes to a D. The MACD is good. Stochastic's only at 73%. It's okay. It's not great. But now it says that this whole area above the previous resistance and the 200-period moving average of 98. But look at the 200-period moving average. Look at this fantastic resistance. All of a sudden, it's become support. So the whole area of 98s is a support level, and a close above the 102 into the 103s would be a breakout. Very important close, I'd prefer, would be a very important breakout in crude oil. Let's look at gold. Same kind of pattern. We've made a peak F in the 120-minute chart. It pulled back to where? to the black 14-period exponential moving average. The green is really positive. It's the 9 above it. It used the 200-period moving average at a peak C1, C2 as resistance, pulls back, gets there, and it hugs it. It is so, the 200-period moving average is so important. It just hugs and hugs and hugs until it can break loose, and now it's on the upside. So we're looking at a brief pullback, up 13 now in gold. It was, in fact, just a tad lower, to negative, that is, and now it's positive again, and this is a very good sign. And it's saying that the move that we're seeing in the dollar, I don't know if I've updated this on the 120-minute chart. Yeah. Well, it made a peak F and then ran up peak A, B, C, and D. And then it made a peak D right there at the 107.64 is a trend line, horizontal line of resistance, and it turns around and it comes back down. What's really important about this, now there are a couple of patterns I could talk about. I don't really want to take time right now. I spent some time earlier in the week. A question came up about the Chapman wave falling axe formation. I'll show the patterns right now because people always like to see what kind of patterns do I use. And this is the pattern. And this is a pattern that says prices go up, 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 and then they start to pull back. And what happens is they make lower highs and much lower lows. And then all of a sudden, they find support, and then they move towards that upper trend line. I call that the Chapman wave inside track repellent zone. And if it breaks above it, it can start to go to all the previous peaks on the left side until it gets to the top, which will say it can go just under, right on, or just above the previous high, and then you've got to be careful. All right? So this is now the inverse. Exactly. I just took the same chart, and even the printing is upside down. That's the same thing. You come down, and then you make higher lows and much higher highs, and then you start to stall, and you form a top, and you come down, and you break out, and you break that support level. In this case, the dollar held that support level perfectly, that particular one, and in fact, it looks like an upside-down shark. And then what happens is it breaks in this 1-to-1 to the upside and goes to 109.29 on the 19th of July, and now it's in a consolidation phase. Now, I can only call it a consolidation phase because the daily, I have to wait for the close today. I'm calling this a sell mode. A sell signal upgraded to a sell mode, and that implies the daily is under pressure. But the weekly is holding the 9-period exponential moving average, has tremendous support between 106 and 104.40s. That's the 14-period exponential moving average, which since it hasn't closed below it, this is one particular technique that I like to teach, and I have classes on this. Since since the dollar broke the week of the 18th of June a year ago, 2021, over a year ago, broke above the 14-period moving average and the green 9-period moving average kicked in, it hasn't turned pink once. In other words, you could have used just one technique, which of course is what we do all the time, if we can, to stay in the position, the long position. We have actually the week just before it made the high, 2 days or so before, we took it at about 108 or so. We took a tad off our UUP, the dollar bull. So I'm still very positive on this. I think it's in a consolidation phase, shorter term. Will it be intermediate term? Well, if any time next week there is a close under 104, obviously it's now impacting the weekly chart. But the MACD is still good. Stochastic's okay at 82%. I prefer if it was 88%. And it is making, look, the high here in the stochastic had the stochastic way higher than the previous all-time high, just at the 109.29, or I say multi-decade high. So that's important. So using the 120-minute chart, basically what we're looking at is, in this particular instance, we're making lower lows and lower highs. It's struggling, but it is moving sideways in the rectangle formation. I needed to talk about that. I promised I would. In the rectangle formation, it's broken below the support and gone back into the support. And that's kind of important. Talk about a rectangle, a narrow rectangle. My rule of thumb is in a narrow rectangle formation, it can last a lot longer than your patience. But when it occurs at a top, there's a really good chance that even if it pops up once it's going to come back and break the low. And look at this. I mentioned this in the den, that between 41.06, I think it was, or maybe 41.08, and 4092, there was, look at this, for 16 hours, there was a trading band, this narrow trading band after such a spectacular move after where? Hitting the 200 period exponential. Tell me that this isn't important. I know people tend to say, moving averages. Well, if you learn how to use moving averages, it's like anything. You could use any tool you want. If you use it over and over and over and it gives you a good success rate, who the heck should even question you? That's what you use, and that's what you should stay with. And here we are. And I said to be careful, because if it pulls back, it could go quite a bit lower, but it has to hold the 40, I think, what did I say? 40.78 level, where it went down to about 40.80, and then it popped up, and now it's making an arch formation, trying to come back. This is the E-mini I'm talking about. I'll be back in a moment. Exact same thing. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, so just before the break, I wanted to show you the same thing happened. It's really unusual to have the sideways, traveling sideways in the E-mini from, this is almost the close of 20, let's see. That was on the 27th at 3:10. It went sideways. And it held that all the way until it tested the 200 period moving average at 10:30 on the 28th. Look, sideways, 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 in a kind of a bowl formation, but then it broke to the downside. 5 bars touched the 200 period moving average like a hot wire, whoosh, to the upside. And then it did the same thing on the upside. And now I'm suspecting, because it's the end of the month, there's a lot of buying coming in. There's some selling and buying and selling, buying. But I suspect that by Tuesday or Wednesday, we start some kind of a consolidation. All right, so now what I wanted to show you is to get out of that. Let's go to this here. This is wheat. Das Wheat. There it is. Okay, wheat's trading at 817 3/4. This is it's 818 right now. It's up 1, and this is the continuous contract. You see this big spike to the upside here? This is what I call an Eiffel Tower. This is called a single leg A. Right there, a single leg A failure pattern. And it happens very often after news or anything. You just get the sudden spike, especially in futures. This is the continuous contract of wheat, and it pops up from the 770 area, whoosh, to just under the 200 period moving average, 930, and then it pulls back and it breaks to a lower low. It's like an inverted dreaded H pattern, right? And then it makes a second one and makes another low. So for 5 days since the low, it's been attempting to move higher. So this is, in the Chapman wave, this is brand new A, but I don't call it blue A, meaning it should go to a peak D. I mean, I call it, although I won't change the pattern, the color now, I call it a gray A, meaning it's just a starter position. Yes, the MACD is starting to improve. Yes, the stochastic's much nicer than it was before, but it's still only at 26. Yes, the on-balance volume gave you the exact low and turnaround, but it needs a lot more. And if you look at the weekly chart, it says, wow, wheat, it could be under pressure unless it's just some news event that has a spiral above the 200 period moving average of 937. That's 20 points above from where it is and skyrocketing to the 960s. So in the meantime, it's just a starting position to turn around. That's all it says. You need other indications to tell you what's happening. Well, if you look at the 120-minute chart, look what happened. You remember I talked about the cup formation where if you choose the right bar or candle, you can use the left side number of bars to the downside and equal the number of bars to the right. Well, there's no way you can get this when it's going sideways, but it did go to a peak D in a cup formation. Then it stalled, and the green 9-period moving average never went negative. In fact, it's been positive right up until it went to the left side, right side price time match to exactly the bar that I chose, particular candle, from this high right here, right there, on 8 o'clock on the 20th at 843.5, I think it was. Yeah, and then it pulls back sharply to the 752 level, and then it has the pattern I call the lopsided gravy cup that says you sharply down to the bottom, and then you take a slow move, higher highs and higher lows, stair-step move to the upside, should take you to just under, or just above the previous major high, and then watch out if you take out halfway of the actual rectangle formation. Well, lo and behold, it made a leg E and then a peak E this morning, and now it's pulling back sharply from the high. It's now underneath the 14-period moving average. It makes this level right here really important on Monday to hold 808. If wheat closes under 808, it continues the sideways action, and it really can't get any traction. Let's go to soybean continuous contract. Well, look at this, just walking the 9-period moving average. Isn't that spectacular? Chapman wave instant restart is a technique that I teach, and there it goes. And it has very unusual to have a second instant restart, because that one invariably will take you to one more peak E or maybe an F, and then be careful because it could be a sharp pullback. But the buy mode is so strong that it says there are a lot of good support levels. So wheat at 1475 in the 120-minute chart corresponds to the fabulous single leg 8 up in the daily chart. Is it going to be a failure pattern? Well, it doesn't look like it. Why? Because of the rectangle that was made in the weekly chart. And if you're looking at this, look at that. The notations I type every single chart. You see every single piece of notation is typed in by me, daily, weekly, monthly, minute, whatever it is. And it's in a rectangle formation. And it's gone right back into the rectangle. And that says soybean is much stronger than wheat. It's acting very well. It's coming off the lows very sharply at 1472, 1440 to 1438 should be support. If it takes out 1504 on a closing basis, 1568 will be the next level. Looking at corn, as we say here in the Boston area, single leg A to the upside, different pattern altogether. It's made an arch formation in the weekly chart, but it's only a peak C. Oh, I forgot to mention that. In the soybean, it's only a peak C in the monthly, and it should go to a new leg D. So soybean overall is a very bullish picture. Corn overall is a bullish picture, a very bullish picture in the monthly chart, because it only made a peak C, and it should go to a D in the Chapman methodology. Short term, it hit a peak F, pulls back at 623 and a quarter. The whole area of 617 to 610 should be a containment area. If it pulls back just a little bit, and by Tuesday afternoon or Wednesday morning it actually touches 640, that'll be a really good sign. But it says corn needs a lot more work before it can really get going to the upside. And the other thing I was looking at is sugar, SB. SB is not acting well. It's got this huge arch formation in the weekly chart, but the monthly chart says that it could go sideways a little longer at 17.61. I would just have to say that the whole area of the 16s must be good support, because if it closes under 15, that's going to be very negative for the monthly chart. All right, so we did cover a whole bunch of things that I wanted to look at. Did that. Euro, EURUSD. The euro is trying to rally here. But basically, I'd said this pattern is one of my favorite patterns if it works. Of course, everything's a favorite pattern if it works. But what happens is the price goes up in a single leg A, and then it pulls back and it makes slightly lower highs, slightly lower lows, but you can absolutely draw a channel. My favorite is when the channel is a little narrower and lasts longer. And then it breaks to the upside, and what it does is immediately takes out the left side high. So this is a little more complex, and the euro at 1.019 should, if the dollar is really going to tank, the euro at this point, right as we're speaking, should not be at 1.019 in my opinion. It should be at 1.03 or a little higher than that. And then I'd say, you know what? We have mirror images of the dollar pulling back and the euro-dollar currency pair moving in counterpoint, and that weekly chart. I'll do this because some of you maybe haven't seen it. I've been showing this for months and months and months. This is the euro using the Chapman methodology of left side, right side price time match. Look at this from 1.063 back in March of 2020, March the 27th, the week of. It runs up, makes the U-shaped pattern. I chose the midpoint right there as a left side, right side price time match, and it did it exactly right there. It broke under it. I'll be back in a moment. Dow's up 92.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstad has 30-plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I was asked, I'll get back to that in a moment, the commodities. I was asked about the Chapman Wave peak C1, C2 yesterday. Here's a very good example. Look, the E-mini 1-minute chart went to a high right here at 10:28 this morning and then 10:29 at 41:23.25. It pulls back. That was a peak C. It pulls back. Still green 9-period moving average over the 14, and then what does it do? It goes to exactly the same price, 41.23.00, 25 cents less. But you see that the right side, look, on the left side, look at the technicals, how strong they are. Look at the right side. Here, the MACD is deflecting lower. The stochastic has just gone under 80%. On-balance volume's turning down, and it says, hey, be careful. So what happens? You're careful, and then what does it do? It goes to where? The 200-period moving average, and it hangs around. How important is the 200-period moving average? Not here, but here it kicks in, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 minutes, consecutive minutes. There might be one bar that didn't, but every single bar has touched the 200-period moving average, and then what did it do? It pulled back in this dreaded H pattern and went down, and it made another arch formation. The left side low was a little bit lower, but already the stochastic and MACD were moving higher. That says, oh, be careful, you could get a decent rally. Well, here we are in brand new leg A to the upside in the 1-minute chart. Look how important rectangles, narrow rectangles, are telling you that there's a price uniformity, there's a price consistency that says until you break away from that area, it's a magnet. Is this not a magnet? Look, we went above it in a 1-to-1 to the upside to a peak B, and yet the technicals are still holding so well that the price is held in this tiny little rectangle that's been going on now for 48 hours? No, it's 40 hours. 40 hours. 24 hours. Wait a minute, what am I talking about? Yesterday at 4 o'clock or 3:30 to today at 12. Yeah, 24 hours, 20 hours now. And it's still showing strength. So I love these. I mean, is this a complicated technique? Is there anything here? Now, you might not in your package have something that allows you just to go like this and draw a rectangle. I love that. And maybe it doesn't have TradeStation, does it? It doesn't have you the cup formation that says, look, there's a quarter, that's the quarter of the semicircle, and here's your other one. But I don't have to do that. I mean, you could do this. Instead of a cup formation, you could just, everybody's got trend lines. You could just go one trend line down and one trend line up, because all it's telling you is that from the left side to the way down, you want to measure the number of bars to the right side. That's the whole idea. And that's all it's telling you. In fact, most of the techniques I don't have to do at all. I do them to show visually here at TFNN, because we're about education at TFNN. So that's why I put them. But the reality is that I don't want to do it now. I should be able to just grab a naked chart and draw these for you. Yeah, we've only got one more break, and there's a lot to do still. So meantime, there's still buying coming in because it's the end of the month. Now, I'd say to you, I'd be looking at, let's do this beautiful arch formation. And look what happened. In that exact plumb line right there, with the left side number of bars from the week of the 27th of March 2020 to the midpoint, which is April, about April, the week of the 1st of April of 2021. Look at this. It came, when you consider that it was 2 years, exactly 2 years later. So how many weeks is that? 52 plus 52, right? And then you miss by 2 bars getting to that exact level. Some of you might recall that I was on air that when the dollar years and years ago, maybe 15 years ago, I don't know what it was pulling back, and I said, I've got a left side, right side price time match, and it comes back down, and it goes to the exact, did I draw it in here? Yeah, there it is. 91.92, the week of 6th of May, 6th of May, 2016, it goes all the way up to 103.82 the week of the 6th of January 2017, and then I drew a left side, right side price time match, and we were on air when it broke that 91 level. It went to 91.01. This one does stay the same because it's an index. It's a dollar index, but all the others are continuous contracts. So these are techniques that I love to use, and that's why I said I'd try to show some of them today so that you can see that in each person's technique, I mean, you listen to, Tom O'Brien talking about his volume. He's consistent. He's always looking at that, and he uses it, and he uses it successfully. Larry has his own way of looking at the Gartleys and fib numbers, etc., and he always uses it. Steve Rhodes has his plethora of techniques. He even uses the Chapman wave methodology, and he's consistent at it. And Tommy Jr. is consistent about looking at the way the fundamentals kick in together with the technicals of putting it together. Dave White has his robust systems where he's looking at volume. And these are important techniques that whatever you use, just try to be consistent. That's the most important thing. Okay, so a couple of things came in. Where did it go? Oh, first I wanted to say, I meant to do this in my show. TG sent me, California exodus continues with LA, San Francisco leading the way. Why are we here? Changes at work, work-life balance, remote work, and more people quitting their jobs are driving greater numbers of residents out of the Golden State. A new report shows these are the vicissitudes of the geographic changes that occur as it happened to, say, the 1930s with the dust storms, etc. This is the same as when the slaves were freed, and then they started to move up out of the South and move. These migratory aspects are important, and it's happening right at a time we are going through an economic displacement of the electronics, that's why Walmart did so fantastically and then whoosh, fell. That's why Target did so fantastically, then whoosh, fell. Why? Because Amazon, AMZ, is the benchmark. They are the ones that are showing how it needs to be done. And even they have dropped from 188, this is post-split, down to the 100 level. 80 points, I would say that's a 46 points. That's a pretty serious decline. So with that said, a couple of things I didn't want to get out of not showing. So high-grade copper. This is a really nice move in copper. It's gone from a low, a doji candle low. I love doji candle lows that work. In this case, it's had a number of them. They were halfway markers. This one on the 15th of July at 3.1315. And that's the reason why for subscribers I've said we are long and we want to stay as long as possible. And this because this time there's a difference in the mechanism, in the technicals. And you can see wood, which is the iShares Global Timber and Forestry ETF, has also come off nicely from its bottom. But both of them say there's a lot of work to be done for them aspect of markets.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
We're back. So in context of looking at different techniques, look, here we are. We made that peak C1, C2, and I'll explain what it is. C1, C2 means that you miss by a fraction going to leg D. But everything has suggested that you had enough strength to do it, and therefore I use it because I'm anticipating in the Chapman Wave buy mode that there should be a D. I want to be as prepared as possible, so I get cautious right here. If I had a couple of positions, I'd take at least some of them off and I'd keep one with a stop or a couple with a stop just below it. And this is it. We didn't make that leg D, but peak C2 was perfect. I developed this technique years and years ago, and we've used it in the den about 3-4 years ago, we started using it a lot because the euro had lots of peak C1, C2 failures, and that was really important to be monitoring. So now what we're looking at is it went pink, and all of a sudden, look, pink, from 41.17 in the E-mini down to 4,100, actually 40.99. That's a pretty darn good profit, and now it's turned green, and now you're positive, you're buying. But of course, to get the exact lows and highs, you use other techniques. But here we are. This is the middle part of the thing that it's so far it's holding very nicely. Still in a leg B in the 1 minute chart. I like to use these different time frames. That's what we do in positions when we have them, because if the daily chart is really good and it develops more strength, like we're looking at, let's go back to copper, because a lot of people look at copper. Like copper, if this trend line, look, it did more than a 1-to-1 to the downside, but if this trend line at some point next week hits the 3.56 is where it's right now at copper, but if copper can get to 3.63 or 3.73 in the next week, that's going to be really good. It'll be saying, hey, maybe we're forming some kind of a base in copper finally. So, okay, with all that, what I want you to do is to say, I think this is the last couple of days of Teddy Cakestack. He's got a new service out. He does these currencies. I was doing currencies before. He just does a fantastic job. I think he's got an inaugural to his newsletter, an inaugural position that you can buy and get a huge discount. Check it out. Folks, have a wonderful weekend. I'm hoping everyone's praying and hoping that Larry's just 100% by Monday. And check out my daily newsletter.